Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we are locking into a deep dive, focusing on 4 really significant news releases that are definitely moving the needle in the resource world. Our mission is to give you a fast-paced but really thorough analysis. We're not just reading headlines. We're going to distill the key financial metrics, the specific drilling results, everything you need to know about copper, gold, silver, and tin right now.
And we have a fantastic stack of sources today. It perfectly illustrates the 2 big forces driving the sector.
Oh, yeah.
On one hand, you've got these critical U.S. copper projects moving forward at a really rapid pace, assets that are meant to feed that huge global demand for electrification. And then on the other hand, we're seeing these incredible high-grade discoveries in precious metals and these really complex, large-scale polymetallic systems all over the world.
That sets the stage perfectly. It's domestic scale versus global discovery. Okay, let's unpack this and jump right into the financials. We'll start with what looks like a potential game changer for U.S. copper production, Arizona Sonoran Copper Company. That's on the TSX, symbol ASCU.
And this is so much more than just a headline. This is basically a detailed economic blueprint. It just completely changes the risk profile of the project.
It really does. The headline alone grabs you. Arizona Sonoran files Pre-Feasibility Study showing $2.3 billion NPV for Cactus Copper Project. That valuation is massive. It's the first key number we have to look at.
Right. That US $2.3 billion, that's the after-tax net present value. They use an 8% discount rate, which is, pretty standard.
Oh, yeah.
And importantly, that's using a base case copper price of $4.25 a pound. So for you, the listener, that NPV number, it gives you a real measure of the asset's worth today. And it's backed by a very strong internal rate of return, or IRR, of 22.8%.
But wait, $4.25. Given where the market is, with supply so tight and all the demand from EVs and the grid build-out, that feels a little conservative, doesn't it?
That is the real insight here for an investor. And they provided that sensitivity analysis if you plug in a more aggressive but, entirely plausible price of $5 a pound for copper.
Okay.
The after-tax NPV just explodes to $3.34 billion. And the IRR, it jumps almost 6 points to 28.7%. It just shows incredible leverage to the copper price.
So with that kind of economic certainty baked in, what does it mean for actual physical output? How important is the Cactus Project for the U.S. supply chain?
Oh, it's hugely significant. The study is projecting an average annual production of 103,000 tons. That's 226 million pounds of copper
Every year.
For the first 10 years. If they hit that, they could become the 3rd largest copper cathode producer in the United States. That's a major, major domestic source of a critical metal.
And we have to talk about the cost side of things. You said it reduces risk, and that all comes down to the cost structure, right? We see C1 cash costs and AISC. Can you just quickly break that down?
It's crucial context. So C1 cash costs, which for ASCU are $1.34 a pound, that's just the direct cost of mining and processing.
Okay, the basics.
Right. The all-in sustaining costs, or AISC, that's all $1.62. That includes everything else, corporate overhead, maintenance, everything you need to keep the mine running for the long haul. And an AISC of $1.62, that is exceptionally low right now. It means even if copper prices pull back, this project is still very, very profitable.
And the location helps with that, I assume. It's on private land, right? Near Casa Grande, Arizona.
Absolutely. It's a brownfield site. That means it's been disturbed before. There's infrastructure there already. It massively simplifies permitting. We're not talking about a brand new site that needs years of studies. This is critical for getting that domestic supply online fast.
Okay, that makes the ASCU news required reading. Let's shift gears completely. We're moving from a massive copper development to the operational realities of a precious metals producer. Starcore International Mines trading as SAM on the TSX.
Yes, this is a classic case of mining reality. A great discovery gets you on the map, but it's the metallurgy and the engineering that actually keep you profitable.
Well, their headline reported a softer quarter. It says, Starcore reports lower production in fiscal Q2 as processing improvements advance in Mexico. They produced 1,860 gold equivalent ounces. So the question for you, the investor, is obvious. Why was output lower, and what are they doing about it?
The lower output was from very specific geological issues at their San Martin mine. They ran into something called the Preg robbing effect and also carbon fines contamination.
Preg robbing.
Yeah, it sounds strange, right?
Yeah.
But basically think of it this way. When you're processing gold ore, You use a solution to dissolve the gold. Preg robbing means that something in the ore itself, in this case clay, it sort of chemically steals the gold back before your process can capture it.
So the rock is literally fighting back. What about the carbon fines?
Carbon fines are just these tiny particles of carbon that get into the processing circuit, and they act like little sponges. They just soak up the gold where they shouldn't, making it really hard to recover.
So, okay, the 8,860 ounces is less important than the response to these problems. What's the fix? What are they doing to show they can stabilize things?
They're installing 2 filter presses, which will physically remove those carbon fines, and critically, they're completely separating their processing circuits.
What does that do?
It means they can treat the tricky ore with the clay in one dedicated circuit and the clean ore in another. It prevents cross-contamination and lets them maximize recovery for both types. These are smart, targeted engineering fixes.
And this speaks directly to what their COO, Salvador Garcia, said. He mentioned, "We will have multiple sources of ore requiring different processing methods so as to continue to produce profitable ounces."
That quote is the whole story. They're building operational flexibility. They're turning what was a short-term headache into really a long-term strategic advantage by making their plant resilient enough to handle anything the mine throws at it.
That is turning a challenge into an opportunity. Okay, let's move to a high-grade discovery story now. This one's up in Canada. It's Foremost Clean Energy Ltd, trading on the CSE, symbol FAT.
Yeah, and Foremost is, mostly known for clean energy metals like lithium, but these new results are seriously bolstering their gold project, Jean Lake.
The headline is all about expansion. Foremost Clean Energy extends high-grade gold system at Jean Lake as shallow intercepts strengthen Valkyrie trend. So what were the grades that really jumped out?
Okay, what's so fascinating here is the combination of grade and how easy it is to get to. The standout intercept was from hole JL25003. It hit 34.2 grams per ton gold over zero point 0.8 meters.
Right.
I mean, that is just ultra high grade. And it was inside a wider zone of 9.0 grams per ton over 3.5 meters. Just fantastic numbers.
And for investors thinking about feasibility, how deep is this stuff? Because grade is one thing, but accessibility is another.
Exceptionally shallow. All the significant intervals they reported are less than 150 meters from the surface. In mining, that means less rock to move, lower costs. It's a huge economic advantage, especially for an early-stage project.
Now, as you mentioned, this isn't just a gold play. How does the gold discovery fit in with the lithium they have on the same property?
That's the real strategic depth here. Jean Lake has this strong gold system, and it hosts the B1 spodumene-bearing pegmatite. That's the rock that contains lithium. So Foremost is sitting on both gold, the traditional safe haven, and lithium, a critical battery metal. It creates this incredible synergy. It also raises questions, are they building a gold mine, a lithium mine? Maybe both. These results confirm they have 2 very valuable systems right next to each other.
And the CEO, Jason Barnard, he pointed to the consistency of it all. He said the mineralization near surface is exactly what we hope to see at this early stage.
And that consistency is everything. It confirms their geological model. It tells you this isn't just one lucky hit. It's a continuous, predictable system they can keep expanding.
That gives you a dual commodity story with fantastic grade. All right, let's pivot to our final source. This is a massive multi-commodity system in South America. Eloro Resources Ltd, symbol ELO on the TSX.
Eloro's ISCA project in Bolivia. I mean, it's being recognized as one of the world's most significant new polymetallic systems. We are talking a staggering amount of silver, tin, zinc, and lead all in one place.
And the headline says they're expanding it. Eloro Resources expands high-grade zones at ISCA, strengthening potential starter pit in Bolivia. What were the drilling results that backed that up?
Okay, so the latest drilling pushed the mineralization even further east of what they're calling the Santa Barbara starter pit. And the starter pit, that's where you begin mining the best, highest grade stuff to get cash flow going quickly. And the key intercept from drill hole DSB92, it just shows the scale. We're talking 90.0 meters, grading 61.05 grams per ton silver and 0.20% tin fed.
Hold on, a 90-meter wide intercept of silver and tin. That is an immense width. Did they see that with the other metals?
Yes. In the same hole, another intercept spanned 238.50 meters. That's almost 800 feet. It graded 1.77% zinc and 0.57% lead. It just proves the massive size and continuity of this system. These intercepts push the boundary another 50 to 100 meters out, which is huge for their upcoming economic assessment.
That scale is incredible. But it brings up a big question. Managing all those metals, silver, tin, zinc, lead, doesn't that create a processing nightmare? Especially compared to a simple single metal project like ASCU's copper.
That is the core challenge, you're right. And it's why metallurgy is so important. The complexity is real, but it's completely justified by the global demand for these specific critical minerals. I mean, if you connect it to the big picture, tin is essential for electronics. Silver is a core component for solar panels. The world needs these metals. And the sheer scale at Iska Iska suggests the value you get out will far outweigh the complexity of getting it.
Okay, so let's quickly synthesize this for you, the listener. We've seen a major U.S. copper asset, ASCU, with multi-billion-dollar economics. We saw a critical operational turnaround at a gold producer, SAM, showing real resilience. Then we had Foremost, FAT, with a super high-grade, shallow gold system that also has that lithium kicker. And finally, LRO, ELO, confirming the expanding, just massive scale of a polymetallic system in Bolivia.
And for you, the learner, this deep dive really shows that value in the resource space right now is tied to one of two things. First, demonstrable, de-risked scale and economics, like ASCU's NPV or ELO's huge intercepts. Or second, real confidence in rapid technical problem solving, like what we saw with SAM's processing fixes and FAT's geological confidence. Knowing these specific grades, costs, and fixes, that's the shortcut to understanding what's moving the market. So considering the scale of these multi-commodity deposits, like Elros Iska, here's the thought I want you to take with you. How will our increasing reliance on these complex multi-metal deposits challenge our supply chains and our mining skill sets compared to the last era that was dominated by simpler single commodity mines? That shift from simple to complex extraction, it introduces a whole new dimension of risk and opportunity for the next decade.
That is an incredibly thought-provoking way to frame the future of mining investment. Thank you for sharing your source material for this deep dive. Use the knowledge gained here to inform your next steps, and we'll catch you next time.